Good morning and season's greetings to everybody. It's the 19th of December, first thing, and normally around this time of year, I would be doing a Twitter thread on the annual allowance and trying to help people navigate this incredibly complicated process and also provide a free little Excel tool so people could validate the information that's inside this and make sure that it makes sense, basically sense check that it's correct. But unfortunately, this year, as announced last week, I mean, obviously we're way past the statutory deadline, and NHS BSA are saying that they're not going to get these out in time, which is fairly obvious. And for a lot of people, they're not going to get them even out by the self-assessment deadline of January the 31st, 2025 for the 23-24 tax year. But despite this, and perhaps slightly ridiculously, given the lack of information, HMRC is still expecting everybody to provide an estimate, which is going to be phenomenally difficult, especially for those people that haven't got an RPSS and completed that process to get the carry forward. So that's problem number one, is that people have got to estimate to complete self-assessment, and that's going to be very difficult. And problem number two is because of the pay awards this year, a lot of people are going to run into problems with 24-25. So to try and help people, I've done a free little tool which I'm probably going to release a pre-release beta version tonight on a YouTube live, Thursday the 19th at around 7 p.m, or possibly tomorrow night, depending whether or not I could just finish some work on it this evening. Some important disclaimer information here, which I'll obviously go through in more detail. And I know spreadsheets aren't for everyone, but for people that are able to navigate it, basically you just need to put in the information in the yellow cells. That's all information from TRS. So strongly advise people to download their TRS today for 23-24. TRS updated yesterday for those people that took industrial action and didn't have a TRS. So the vast majority of those people should now have a TRS, which they can download. And so you'll basically need a TRS from this year, plus or minus a TRS from last year, and or pay slips. So you put in the information in the yellow, you validate against TRS the information in the cyan. I have included both 1995 and the 2008 schemes. And as you can see per this example, which won't be a million miles off a mid-career consultant, large negative growth this year in the 1995 scheme offsets positive growth in the 2015 scheme, which means that this person has a small PIA. And so even if this person had taxable income over the 200,000 threshold for threshold income, they still don't have a charge. And in fact, not only do they not have a charge, but they also generate a large amount of carry forward, in this example £52,000. So that's the tool for this year, but as I said, there's also going to be a problem for the 24-25 tax year, which is the year that we're in, the year that you can do something about. So I've included a little tool that will allow you to use your November payslip to accurately predict for most people what your pensionable pay is going to be by year end. This is for people that have already had back pay within their pay awards, but I know in the devolved nations that's not the case for everybody, but I'll talk people through that in the YouTube. So you can see, unlike the position for 23-24 where there was a very small PIA, for this member who's also got an increment in around 25 years, so kind of mid-career typical consultant, you can see there's a very large PIA. So if this member, like the previous year, had a threshold income of £210,000, you can see they're in for a very large tax charge indeed, 25,000. So, but the reason I've done this during the tax year is just to allow people just to see what different scenarios look like. So, for example, if that member went from £210,000, which had this tax charge of £25,000, but then brought it down to 199, that tax charge goes from £25,000 to 7,800. So obviously, a reduction in £10,000 gross income or £11,000 gross income has reduced that charge by something like £18,000. So that will just allow people to look at different scenarios, including private pensions. There's just a brief summary screen of what the two tax years look like. Obviously, entirely reliant on you putting the correct information in. Put rubbish in, you'll get rubbish out. And just a brief note, still looking at the 2008 scheme because I have seen some issues on some TRS, but I will include 2008 probably. And for the 23-24 tax year, that should be straightforward because you can get your reckonable pay from TRS. For 24-25, I'm going to include two methods. So one method is the same method that the NHS employers tool uses with First Actuarial, and I'll talk through that. But that comes up with a warning that using actual pay rather than reckonable pay is going to give you a poor estimate. So, but for people that want to do it in more detail, they'll be able to go through all of their earnings over the last 10 years to get a much more accurate picture of reckonable pay. So hopefully see people, it's either going to be Thursday or Friday at 7 o'clock. Many thanks.